Hey traders, checking in on the stock market today. We've got SPY back at all-time highs. We have the pattern over the past few days on QQQ is pretty much as frustrating a pattern that you can have for bears. I'll show you exactly what I mean, and I'll go over a bunch of little day trade flips that I made today and highlighting the power of having multiple eyes on the market. So starting off with SPY, we've got a new all-time high straight from the low of consolidation, higher low every day the last 5 days, and a new all-time high. It is the majority of the reason XLF, which is pushing all-time highs as well, but while XLF has maintained strength, QQQ got its bounce going, and that was enough to get us back to all-time highs. At no point were we significantly fearful in the S&P 500. The rotation, the clear strength in our laggard sectors, and our trusty weekly uptrend were all reasons to be looking bullish on this consolidation. Anything above 368.27 was a weekly higher low. We held that level, and now we got a new all-time high. So we'll be looking up to 400 psychological resistance. We know the next time we do consolidate, the next time we lose the pattern of a higher low every day, there's plenty of space to be looking for a daily higher low to form the next time we consolidate. So QQQ, here's what I mean by the most frustrating bearish pattern that you can have. Let's try that again. The most frustrating pattern for a bear that you can have. So it's happened 2 days in a row now, and you can see they're just opposite days back and forth. We had Monday, complete bear control. End of the day, complete bear control, complete bear momentum. Bulls didn't even exist Monday. Overnight, Monday into Tuesday, the market grinds higher, and we wake up, and we're at the high of Monday first thing, and we very quickly break that high, and as soon as that happens, anybody that went short the previous day is instantly underwater. Yesterday, gap up open, bears controlled the entirety of the day, closed weak. Higher open overnight. This is the grind up in futures trading, higher open, first thing this morning, anybody that shorted yesterday, back underwater again. It's just constant pressure on shorts. It's the number one reason I don't like swing trading. Because again, if I'm trading QQQ and I'm in positions here, bearish positions, I am getting very, very frustrated. And the other thing is I can't limit my risk. You know, if I'm in a QQQ bearish position yesterday from 315 and we drop down and I'm very comfortable, and normally, you know, let's say I'm in from 314 and I'd be putting my stop at break even, 314. All right, if the bulls recover back to that level, just stop me out break even and we'll reassess the situation. I wake up today, it's past where I would stop out. The risk of the trade is more significant than I would allow it to be, and it's just a lot less control. That being said, the bulls are in control of this uptrend. So what I was watching for from yesterday's video, I was looking for higher opens to potentially be the case, and I was watching for hourly lower highs on NIO and Tesla to be looking for bearish entries. So we got that first thing, and NIO was a little bit tricky in the first few minutes of trading. I don't know what was going on. There was issues with some brokers, but if you just look at the 1 minute volume, something very strange happened where we opened, had a big push up right when the bell rang, but look at the 1 minute volume until 9:33. It's almost like we needed 3 minutes for the market makers to get their act together and to start actually trading. So I know people that had orders that just wouldn't fill. Market orders in the first few minutes just wouldn't fill on NIO. That was too fast for me anyway. I didn't get that top fish. We ended up pulling back from the high of yesterday by about 80 cents or so. And then we dumped multiple dollars. So there was a really nice top fish play first thing. I missed it. And I just patiently watched for the tightening range. And I traded NIO in both directions this morning. And I just traded a bounce. I knew to be looking for a 5 minute lower high. I traded bearish along the way, double bottom, played bullish, and then by later morning, I was done trading for the morning, and I knew I wasn't going to be here all day in my normal full trading day focus. So I was done with it. I left the computer, and bulls certainly recovered very well and saw follow through and broke the high of yesterday. And there was a reason that I wasn't going to continue trying bearish, and the reason was, number one, QQQ had already broken bullish. I was watching the futures chart, which had a very clear resistance level first thing, and that pretty much determined for me, I'm not trying bearish anymore. And it was this top. So pre-market, we had a top here, and we just rejected. pulled back, still an hourly higher low, and then we confirmed the hourly bull flag. So just seeing that bull break, I knew, okay, I'm not going to spend all day looking bearish. I headed into the day with a bit of a bearish lean with a setup that I liked. That setup had a little bit of follow through, but in the end, bears did not break the lows of yesterday. So we can't be confident that our daily lower highs are set because we didn't lose hourly uptrends. You look at how QQQ started the day, it was with a higher open, and we would have had to have broken the low of yesterday. So none of our major sectors broke their low of yesterday, so daily lower highs have not been set. And again, the momentum yesterday certainly made it look like those might be shaping up. Overnight session helping the bulls trap bears and keep control of the hourly uptrend for now. So looking at QQQ on the daily, still a pattern of a higher low every day the last 4 days. And we're looking at this next resistance level, 324.33. If we reject from that level or get right up to it and don't get any follow through, that's when we're watching the inverse head and shoulders for the bulls to try and set up a daily trend change. We know at this point, the odds that a daily higher low is going to be set next time we consolidate is high. And again, I don't even need to pull up the retracement tool, but if I just wanted to be sure, from the last top of the bounce to the low of the pullback, this bounce has now gone very significantly. We've made it back 80% or so of that drop. So again, plenty of space for a daily higher low to form next time we consolidate. And we're not going to see daily consolidation if we keep putting in a higher low every day. So key support tomorrow for me is 314.85. If that holds, top of the bounce has not been set yet. What I want to see tomorrow is a gap up open on NIO. NIO has been a beauty to trade in both directions. And again, just not having I have my trade game plan and I know what I want to see for the trade to come to me, but I don't have a bias. So it was very easy for me to trade NIO bullish this morning after that initial rejection and after seeing other signs that the bulls were out today. And NIO tomorrow, I want to gap up open to short it, just like yesterday. Again, getting real extended at this point on this bounce. You know, from our low, we've now gone 40+%. I'm watching resistance of 50.42, and I want to gap up open to be looking for bearish entries. And even if it's just looking for hourly consolidation initially, which is just what yesterday ended up being, then there's certainly enough volatility where that trade is very worthwhile. So starting to get a little bit more aggressive, scouting for temporary tops of the bounces to be set, but again, knowing that we will absolutely be looking for daily higher lows on all of these names that are correlated, whether it's the ARK ETFs, we're looking for daily higher lows, whether it is the EV names, MJ names are going to be watching for higher lows. So today did a lot in terms of shifting the probabilities of daily higher lows from here. IWM, new all-time high. Bulls in complete control. Again, same as SPY with just a V-shaped monster move. Higher low every day, couple gap ups along the way, and just keeping that weekly uptrend real strong. EMA 12 support, continuation of the uptrend. Financial sector, still watching this rising wedge that I drew in yesterday's video. It is still in play. We rejected from it even though we hit a new all-time high. So until we either clearly break over 35 or break this pattern bearish, I'm going to be keeping a close eye on it. As far as the daily chart, higher low is 33.52. That's the most important support level. And again, a new all-time high, not much follow through. So that's what a rising wedge is. A rising wedge is a pattern that breaks bullish, potentially consistently multiple times, and then just lacks follow through. It shows us bulls getting tired where resistance breaks don't see significant follow through. So we keep an eye out for consolidation. So just something I'm watching. No trade game plans around it just yet. Healthcare, higher low every day. So again, look at the last 3 days, extremely toppy, as bearish a candle as you can get, but no bear follow through the following day. Every day is holding the low. So we're looking at the high of the bounce, 115.20 resistance, and the pattern of a higher low every day. And to keep it simple, most sectors, that's just the pattern we're watching in the short term. Can it hold the low of yesterday is the question we're going to ask every day from here on out. Biotech sector, significant move. Next resistance is 152.28. Higher low each day the last 4 days. That pattern has to break for us to then be scouting a daily higher low, certainly correlated to QQQ, and we will be watching for a daily higher low to be the most likely scenario once we do top out. Semiconductors, same story. Again, very weak 2 days here, but no bear follow through the following day. There's a lack of resistance. We don't have as much space to work with. Again, I just did the retracement on the bounce for QQQ, and we were looking at 80%. And we can just compare and say, okay, we're a little bit weaker. And we've gotten to about the 60% retracement from the last lower high. And another way to gauge and compare is how far are we above that low, percentage-wise. And right now I'm holding down shift, and we're dropping down. It would take an 8% drop to lower lows. And if we're comparing that to some other things, so that's the semiconductor sector, let's compare it to our solar sector. 18% drop. Very big difference. So tan, same thing, higher low every day. The bounce has not topped until that pattern breaks. We're going to scout daily higher lows, but only when we lose the pattern of a higher low every day from here. And they're all correlated, they're just different strengths. MSOS had some news from New York, making some more steps towards finally trying to get some legalization going. That was an end of the day boost that the sector really needed. You can see the volume kick in here at just around 2 p.m. Canadian MJ names really thrived off of that. And again, bulls really needed that because we were looking really weak. Still pretty weak overall. We definitely want to see another leg up and another higher high, but certainly better today than yesterday. And we've got about 12% above our current low, and we've bounced about 50% from our last lower high. So bulls definitely want more follow through. And here's another example where, again, today I wasn't fully in the zone trading. I was going to do other things. I was running errands and working on other projects and stuff. So I keep things up, and if something stands out, I'll make a trade on them. And this was a perfect example where, again, just having a community where people are watching things for me. I wasn't watching APHA. I wasn't watching the MJ sector closely at all today. And then just in the chat room, Dirk Diglett at 150 posts APHA huge spike. So APHA huge spike 150. What's going on at 150? He nails it. First 1 minute candle, boom, information. So I jumped in terms of, didn't make an entry, but jumped into the chart and said, okay, volatility, volume, great, I can trade this. So I watched the initial push up, I then watched this consolidation, I said, all right, I'm going to watch for a 1 minute lower high and try and short the 1909 top. And I did, and I covered at the 1 minute EMA 12. So that was just a tiny little flip, get the gears turning, get the blood flowing, and bulls got follow through. At this point, I say, okay, things are a little bit too extended for me to want to make bullish entries into this move. I'm watching the 1 minute EMA 12. When that 1 minute EMA 12 breaks and the 1 minute uptrend breaks, I know that we're looking for 2 minute or 5 minute consolidation. And I'm going to look for an entry on 2 minute or 5 minute consolidation. So from there, 2 minute time frame, I was targeting EMA 12. And it was a bit of a waterfall drop, which is exactly what I want to see. Little volume climax. Made my first entry right at that line, 1913. And I'm sitting there with a second entry that I'm going to make on a break of 19. And I'm playing off of 1881 support. 19 didn't break, but I'm sitting there with my market order filled out, and I'm just watching the price action. I'm watching QQQ in the broader market on my other screen. I'm just sitting there saying, okay, is this our 2 minute higher low? Are we bottoming? As soon as the bulls start showing up, instead of waiting for a 19 break, I make that second entry a little bit more aggressively, got filled at 1905, and then just scaled out knowing a 2 minute lower high was the most likely scenario. And then I jumped in short. And I jumped in short at 1936 and had a really good fill there. And I was just typing in the chat room, looking for a short. If we get into the 1930s, I'm going to top fish 1954. So we get there, get my entry, and I covered it before 1903. I was just looking for a quick flip. All of these trades, none of them are significant. They're all 15 to 25% day makers. But I'm stacking them up. I got that 1 minute short flip, maybe a 10-15% day maker. This 2 minute high or low, 25% day maker. That little short, 20% day maker. And just like that, I'm pushing a day maker where otherwise I didn't have a ton of activity today. Traded at NIO start, but volume and volatility present themselves. And I know that that's an environment that I can day trade in. From there, that's all I did on APHA. I was watching for, I actually left the computer again. Nice 5-minute higher low off EMA 12. And then we just grinded that 5-minute EMA 12 all the way up to the end of the day. So nice day for the bulls in USMJ. The VIX breaking the daily higher low. We've set daily higher lows ever since mid-February, and that has now broken. So weekly big time pullback from the last lower high, and now we're looking back down at weekly level 1950, 1970. So the weekly lower highs keep coming ever since the October spike, as far as just 1 week events and a lack of follow through. The dollar pulling back. So now this is a significant pullback at this point, which opens up the possibility. Remember, again, we're watching size of the pullback. Does it favor continuation? And at this point, we're getting to a point where we can be watching for the potential of a daily lower high next time we bounce. So we're scouting a daily higher low. We'll see if the bulls can hold EMA 12 again. But if we see a lower high and lower low confirming a daily downtrend, we zoom out and we scout weekly consolidation. And that's a weekly trend change without a ton of follow through. And keep in mind, bigger picture, we're watching for a monthly lower high. If we confirm a daily downtrend, that is baby step number 1 for potentially telling us our monthly lower high has been set. So one step at a time, still a daily uptrend, but bears and market and metal bulls are liking the size of this pullback at this point. Gold struggling at the EMA 12 resistance initially on the daily bounce, but we are still in a 4-hour uptrend. Bulls trying for a 4-hour higher low overnight tonight. If we lose the 4-hour uptrend, our daily lower high is set. And again, retracement is not significant enough for bulls to be comfortable at this point. From our last bounce high, we have just gotten up into the 45% range. Bulls want 50 and beyond to be confident in the space created for a daily higher low attempt. Let's see if the bulls can keep this 4-hour uptrend overnight. Silver, same thing as far as the 4-hour uptrend is concerned. And if we lose it, not a ton of space for a daily trend change. There will be an attempt, but bulls obviously want as much space as possible. Miners, inside bar bull break today, watching this downtrending resistance line. And if the metals set a daily lower high and pull back, we'll look for the miners to do the same. I like this falling wedge look. We know we're watching for a longer term momentum shift in the metals and miners. So I will be paying attention to this falling wedge. I'd like to see one more rejection and one more higher low. Oil daily higher low very convincingly set at 63.13. That's our new line in the sand level. And now we're looking back up at the high of 68. We would have to reject 68 and break 63.13 to lose the daily uptrend. Bulls keeping their control. You can also be watching this little RSI equilibrium. A lot of people use RSI divergence and tightening ranges. I don't use them nearly as much, but it's something to watch for. And natural gas, trying to get the daily bounce going. It's a daily bear flag at this point. Not convincing in any way. And we need to see these bulls get up over 280 if we're going to see a bounce big enough to try and not be a daily bear flag. But it certainly looks very similar to the last bounce attempt at this point, which was a bear flag. Bitcoin is testing all-time highs. Again, just confidence returning to markets. So SPY all-time high, Bitcoin testing all-time high. I want gap up opens tomorrow to be looking bearish. What else? There was a Tesla trade. And again, just the chat room. I wasn't watching Tesla at all. Tesla, real Tesla volume, high of day test here, 3:24 p.m. So I pulled up Tesla. At that point in time, QQQ was making a 5-minute bull move. So I like that setup. I like the double top resistance. It's very clear. And I was sitting there. And so I said, all right, I'm going to buy a break of 700. And we started chipping away at the wall. And I started getting confident that that wall is going to break. So I market bought into the wall. I got filled at 700. And it was, I didn't just buy that wall. I watched that wall. It got chipped away. And a good chunk of the shares were gone. So then I just contributed to that chipping away. And obviously the risk there is that it doesn't fill and we end up pulling back. And I would have cut that real quick. I would have bailed if we didn't break 700. But right after I got filled, we broke 700. made a push up to 702.50. And you might look at how this ended the day, how this day ended and say, big whoop, why is this notable at all? This is an example of a failed, what I would consider a failed trade where I made money. So entered at 700, we did get the break, and at this point I'm not watching any charts. I know 700 is a key level. I know the high of yesterday was 721. I'm just watching the bid and the ask. I've got my market sell order filled out with my finger over the trigger, and I'm just watching the bid and the ask of Tesla to see how much can these bulls push forward. I wanted $5 to $7, which is 0.7 to 1% follow through, to be a day maker. And I didn't get that, obviously. So rather than letting it go red, I'm just sitting there watching things, and I'm watching the bid and the ask, like I said. And if you look at it on the 15-second chart, which I was not watching at that time, but I could see what happened here. We saw the bull push, $2.50, great, not ideal, but got a little bit of follow through. Sat through this consolidation because we didn't get back to my break even. We didn't break 700 on the pullback. If we did, I would have probably bailed very quickly and took a tiny loss right here. And again, I wasn't watching this 15-second chart. I could just see 702.50 is our high. We pulled back a little bit. We tried it again and we failed. 702.48. As soon as we failed 702.50, I'm out. And I ended up with a gain of $1.20, which is a 15% day maker, which again is nothing notable. It's a few fancy dinners, which I will certainly take for a minute and 30 seconds of work. But it was a failed trade. It didn't reach my target, but I made money on it by recognizing the double top red flag. And again, shout out to the helpful chat information. I wouldn't have made any of these trades if someone had not talked about them. So thanks Chris Brown and Dirk Diglett. So that is where we stand. Higher low everyday pattern. If that pattern remains intact, no daily lower highs on QQQ and correlated sectors. And we'll see if the overnight bulls keep their moves going. I'm pretty evenly balanced in my portfolio right now. I do still have some QQQ short on. And until we change the daily trend bullish, I will keep that for the most part. Still got some USMJ exposure. I did lighten it up yesterday, but still in half of that. SPY, metals, Bitcoin. So things are good. Just getting my base hit groove back on. 2-day maker today total. And we'll see what tomorrow brings. Do good things. Have a great weekend. So one of the first major projects we're going to be working on is building raised beds in this general area. And going to have to fence it off, but the game plan will be to essentially shave off the top few inches of this sod and flip it over onto itself, and we're going to make a worm lasagna basically. So we're going to do that, and then we'll do a layer of manure, and we'll do a layer of some wood chips. Going to go around the yard and collect all the rotting logs that have mycelium already growing on them, bury those logs in there with the dirt. We'll get a bunch of leaves, and I'm definitely going to have a bunch of leaves to get in the fall, and do a layer of leaves, and then over the winter have that bed already established and put some cover crop on it, whether it's some winter peas or something along those lines, to fix nitrogen into the soil, and to their roots also create little airways and waterways that make the soil healthy. There's essentially trying to build up a colony of beneficial bacteria, and you could compare it similarly to your insides in the sense that, you know, are you going to start with a fresh stomach and throw food in there and hope for it to digest? Or are you going to build up the beneficial bacteria in your belly and then put some food in? So that's the goal with letting the soil have all winter to do its thing. So we'll get some secondhand secondhand wood from a sawmill and make those beds out, and then put wood chips in the paths in between, and then fence it off eventually. So we'll start with this space and then expand it to other spaces. I love watching the crows and the hawks battle it out. And move on to other spaces from there. So the process now is getting, you know, a dump truck of wood chips delivered, a dump truck of manure. You can generally find free manure out there, but you do want to make sure that the horses aren't being pumped full of pharmaceuticals and all that stuff, because it will end up in their manure. And leaves, I'm gonna go out and steal a bunch of people's leaves bags when those are out on the side of the road. And there's some big trees, probably 20 years old, that have been cut up from when they cleared all this land, and those logs are all up back here, and so I'm gonna collect those. And I'll keep you all posted on the process. It's probably gonna be multiple weeks doing everything real slow and no rush on anything, which is nice and convenient.